And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Happy Friday, everyone. April Fool's Day today, Friday, April the 1st. Hopefully, if you're in the market, things are going your way. We've got a lot of economic data to sift through this morning. But as always, we're going to be seeking accurate context, thinking about good risk management and remaining patient. 7:30 this morning, the unemployment numbers came out. The participation rate seems a number that people are focusing on. It was 62.3% last, up 0.1% this trip, 62.4%. The unemployment rate dropped from 3.7%. It was 3.8% down to 3.7%, now down at 3.6%. Non-farm payrolls a little bit disappointing. They were looking for 490,000. Only 431,000 were added. And the private non-farm payrolls, we were looking for 480,000, only 426,000. We're still waiting for the final for the PMI manufacturing numbers. That's at 8:45 Central this morning and 9 o'clock Central. The ISM manufacturing index and construction spending still due out. So a little bit of a data deluge this morning. Lots to digest, lots to look at, and lots to think about. Speaking of what traders are thinking about, U.S. stock indices were higher, set to open higher this morning before the numbers. Still set to open higher, although we've had a little bit of a knee-jerk reaction to the downside. European inflation has hit a record high in March. Russia is going to start to enforce payment in rubles for gas starting today. From what I understand, peace talks are expected to resume today between Russia and Ukraine. Let's hope for and pray for peace. GM and Ford are going to be temporarily closing some plants due to parts shortages. Not good news. And crude is hovering around $100 a barrel after the information that we received this week. Make sure you remember to hit the lucky like button, share, comment, question, feedback, heckling, and love are all welcome here in the Market Forecast. Subscribe to our YouTube channel so you can get notification when we do go live. A quick look at the VIX, the dollar index, and the 10-year yield. VIX down about 2%, but still above 2010. Dollar index up slightly at 98.55, and the yield on the 10-year up ever so slightly at 2.4%. Good morning, everybody. I see we got some folks saying good morning here. Manuel Caesar, first in the room. You win the prize this morning. Sean, good to see you. Hogan, the Hogsters and the Hogettes. Theo, good morning. Brian, Zachary, Andres, dead letter opener. Terry King, tacky on with a nice downside call yesterday in the Make Hogue Money. Dan Trader, Luis, Scott saw, and he conquered. My brother Rick, good to see you. Missed you the last couple of days. Thinking about trying to get up there to see you this weekend. Fred Decker, good to see you, and happy birthday to Eddie Horn. I'll make sure and let him know that you are sending him some birthday wishes. Nico, good morning. Vince, happy Fish Fry Day. Yeah, I was thinking about, we had fish last night. I'm thinking about, Vince, really a nice pepper and egg sandwich tonight for dinner. A nice Italian pepper and egg sandwich. That might be good. Three Lions Insight, good morning from Daytona Beach. Boy, I'd like to be in Daytona Beach right now. I woke up to a dusting of snow here this morning. Expediter Dean, good morning to you. Taurus Trader Sarah, and a fine dawn morning to you. Happy Friday. Robert, Trading Research, good morning. Devant, good morning. Massive June ES options spread caused the big drop to close yesterday, according to Reuters. Rational Investor, good morning, Mr. Beamish. Dead letter opener, Fred. Hello, dead letter opener. Hello, Rational Investor. It's Eddie's birthday. Yes, I will make sure and let him know that you guys were sending him happy birthday wishes today. All right. Michael with some thoughts on the ES there. And Carol, good morning. It's always good to see how other people are looking at markets. You know, we've got a short time frame with which to look at the markets here in the market forecast, kind of looking at context through the lens of the profiles, be they volume profile or market profile. And we try and get a good idea of what the markets are doing and how good they are doing in doing that. All right. Michael, good morning. James, Tachyon. Daily high was extended up a few times in the S before market opening. 2-hour MACD is showing uptrend. 4 and 8 still showing a bit downward. My prediction is up or ranging. Thank you for letting us know, Tachyon. Good morning, LT. Yes, NFP. Yay. Excuse me. Let me get a sip of coffee here. My coffee cup's happy it's Friday today. Level 2's with the dancing bear today. Thinking maybe things are going to head a little bit lower, it sounds like. Good morning, Janus. Got a little tickle here. I apologize. All right. It's Friday. Most of the time on Fridays, I'm looking for just the next good trade. I like to see if I can't make a little money and call it an early day on Fridays. As I always mention on Fridays, we always said that anybody that was left in the pit after 2 o'clock on Friday was down money, and I don't want to be one of those. LT, the vacation was nice. We were in Table Rock Lake, which is kind of the border of Missouri and Arkansas. We have some friends that have a place down there, and we like to go visit them. It's a very pretty place on a lake, and again, the weather wasn't all that great, but we certainly had a good time. It's good to get away and good to get back. I still feel a little bit like I'm still getting my feet on the ground as far as these markets are concerned. Dead letter opener just had COVID. Interesting experience. I'm glad that you are doing okay. Yeah, Stephen, that was a grind to the downside, and then the deep fall. And we do have a late spike in our equities. We've got spikes all over the place today. We're going to see those in the charts right now. That letter opener again, I'm glad you have recovered and that you're doing well. I've had COVID twice, even though I don't go out that much, and I'm vaccinated and boosted. And again, I've had it twice. I'm not sure what good the vaccines really are, but at least dead letter opener and everybody who's had COVID and recovered, we're doing okay. Not some folks have not been that successful. Level 2, I'd love to come to Trinidad. Sounds like fun to me. Yes, Andrew, don't lose your A on Friday. Lots of other friends of mine that are in the industry like to call it Capital Preservation Friday. Capital Preservation Friday. All right. No, Lacey not bringing COVID home. She's looking at me. She's up by the window looking for dogs walking by, so we might hear her chime in here at some point. So, well, why don't we go ahead and jump in and take a look at the charts. Get things set up for us here, and let's take a look. Okay. Daily in the E-mini S&Ps. All right, novel two. Yeah, Zachary talking to LT about, or dead letter opener about getting COVID. And again, glad it was tough on the psychology anyway. Good to have that fever behind you. Yeah, thank goodness, right? We're glad we're okay. Need money for the bar Friday. There you go. There you go. All right. E-mini S&Ps. Pullback off the highs brings volume, but no open interest change. This pretty decent volume on this downside move, which is typical in the equities. When we have down days, it tends to bring in more volume, but no change in open interest. We lost only 600 in open interest. I find that interesting. Big down move like that, and nobody moved. Nobody moved any positions. Maybe there was some, but even position changes. Are we going to find support today at last week's high? This purple line here is the high from last week. We tested down below it yesterday, closed back above it. We tested to it today, basically right to it, and we're sitting on it right now. Is that going to be a supportive number for us? These markets are very visual. We never really know what's going to end up being supportive, and so far it seems to be a little bit supportive for us. Here's the 30-minute chart showing, yes, our late spike break to the downside yesterday. There's two bases to the late spike. Where I look at things, it's the L breakout, which is 45, 67, 75, and the M breakout, which is here, which is about 45, 62 quarter. We're opening in the late spike. When we open below a late spike to the downside, it marks almost instant acceptance of lower pricing. Opening in the late spike is giving us time to see if we are accepting lower pricing. Already we see that the market has had some overnight longs in the overnight, and they're already kind of reconciling those longs. Keeping us basically in the late spike. The longer we stay in this late spike, I would think that the higher the probability of acceptance of lower pricing. We can, however, trade all the way up to the base of this late spike. Okay, all the way to the bases of these late spikes and still be looking for opportunities to sell strength. It's only if we accept above the base of the late spike where we would start to look for longs. So Tachyon's idea of perhaps higher or to ranging could be correct. There's a lot of information to digest today. It is Friday, beginning of a new quarter. It's going to be an interesting session. I mean, our overnight longs kind of reconciling here again. It's all about acceptance of lower pricing or rejection of lower pricing and reacceptance of higher pricing. So just these bases of this late spike are going to be extremely important for us today, if even visited. Overnight longs reconciling as we speak. Settlement 45, 30, 75. We've got a long way to go before we get down to that settlement number. But if we can get down there, it may, be an opportunity for us to look for a long, because again, we're in the late spike and seeing if we find acceptance in the late spike. Shorts, if we get up to the base of the late spike, gives us the opportunity to limit risk. The low of the session yesterday also gives us the opportunity to limit risk. In the middle here, I'm going to try and stay patient. Overnight low, overnight high, not at any of the important inflection levels that we've been talking about. And we're right basically in the middle. So I'm going to try and stay a little bit patient. Let's take a look at crude oil now. We're in the opening range in crude. The daily, we are still building energy here. We added 8,300 in open interest yesterday in a range-bound type of activity. We added some volume also in range-bound activity. This market, if you will, forgive the pun, is building energy. Volume and open interest both higher. Range-bound rules apply until they don't. In other words, this trend line down here is an opportunity to look for longs unless we accept below it where we would go with that. So we're fading extremes on these trend lines until we find acceptance outside of them, then we go with them. Range bound, fade the extremes until acceptance outside, and then you go with the direction of the acceptance. Here's the 30-minute chart. Just finishing the opening range. Got a little bit of a gap here. Overnight shorts. 103, weekly kickoff low. Holding below. Looks like we've got a pretty substantial opening range again, which does complicate things. 85, so only a 20-tick opening range. Nope, that is incorrect. Opening range is here. So for some reason, it's not presenting it correctly. 99.41 down to about 98.92. So about a 50-tick opening range. Not a very good opportunity for us. Again, looking at the gap open, if we can't close this gap relatively early, that gives us the opportunity to look for shorts. Relatively early, a subjective term, of course. And with the opening range looking like it's the high of the session, we might start to look for shorts upon entry back into the opening range. So the market's offering us that opportunity. We looked there it is. There's our opening range. Market's offering an opportunity after exiting the opening range to the short side. It's giving us an opportunity to look for a cheaper short. If that is what you're thinking, you think we're not going to close the gap, you're looking for opportunities to sell strength. A move back into the opening range to limit risk can be a very helpful opportunity. Nasdaq. Boy, weekly kickoff high certainly did help us a couple of times here in the Nasdaq. Two peaks above it on Tuesday and Wednesday. Really finding some decent rejection. Yesterday, we added 3,300 in open interest on higher volume. Something we did not do in the S&Ps. Is this new sellers coming in? It certainly seems to be so. The market overlapping to lower in the extended trading hour range, closing lower, higher volume, higher open interest indicates some new selling coming into this market. Some new naysayers, if you will. Again, last week's high, will it end up being supportive? Yes, Fred, I saw that. Russia is demanding rubles for any energy exports. Interesting. So again, back to this Nasdaq. Last week's high, supportive on our deep dive yesterday. Haven't tested it in the overnight. But again, we added 3,300 instead of no change in open interest. We added open interest. When the market is attempting to auction lower on higher volume and higher open interest, it's more likely to go in that direction. The late spike in the Nasdaq. 14,960 quarter. This low right here, 14,960 quarter, is where the base of the late spike is. Look at our overnight high, 14,960, within a tick of the base of the late spike in the overnight. Overnight longs reconciled. Get opportunity to trade again at that base of that late spike. That's something that is certainly one of my hypotheses to see if we get another opportunity up at that level. Unfortunately, we got that opportunity in the overnight. I was not going to be trading then. Okay, our overnight low, last week's low, we've got a naked point of control down there, and we've got the settlement price, which, by the way, is exactly 14,868.75. There might be some fish down here. Which side of the boat? I don't want to do anything in the middle of the overnight range. I'm more interested in basically the low from yesterday with all of this other information, and I'm very interested in the base of the late spike. Let's take a look now at gold, which put in a late spike to the upside yesterday, showing rejection. Yesterday, lower, not great volume, losing 9,000 in open interest. The auction process that was attempted off this low doesn't seem to be doing a very good job. Lower volume, lower open interest. Take a look at the 30. Settlements all the way up here, 1954. The late spike, the base of the late spike right about here at 1950. Does it matter? We put in a late spike yesterday and rejected it almost immediately. Looking at this market as an opportunity to trade basically 1926 even weekly kickoff low. That's an opportunity for us right there. Unfortunately, that opportunity looks like it has passed. Right now, we're looking at a 50-tick winner if we just bought it right on that weekly kickoff low. Still working on, eventually filling in this gap down here. But right now, we've got a whole lot of overnight shorts in this market. If we can't take out if we can't take out weekly kickoff low, bam. A lot of shorts in this market, a lot of overnight shorts. I'll take a look now at the euro. Okay, weekly kickoff high. A couple of attempts to hold above it. We were unable to exhaust sellers up at that level yesterday on a little bit lower volume. The open interest, we lost 7,800. So we had some longs here yesterday that finally decided, okay, that's enough. We're getting out. Central location as far as price is concerned, we're back inside last week's range. We're central between weekly kickoff high and low. This is a short time frame controlled market now. May have to put this back on the back burner. We've got this gap in here, which is prime for repair. We've got overnight inventory to the short side. We're still holding a little bit of a gap from the close from yesterday. And again, if we can't close the gap, this may go a long way to repair this previous gap that we're currently in. So gap rules from day to day, and then potential repair of a previous gap is entirely possible today. But again, we're in short time frame control, so short time frame levels will be important. We've been unable to close this gap. Are we holding some overnight shorts? Maybe. So I'm going to be looking for opportunities, I think, to look for maybe a gap close for resistance or value low yesterday for resistance. It's pretty close to our overnight high. Anything to the downside, I'm really going to have to demand better trade location. Maybe the base, the bottom of this gap, or even points lower. The 10-year. We've got a breach of the bear flag in regular trading hours. there's a secondary breach of the bear flag, which would take us down below this trend line here, which we're getting pretty close to. We added 22,000 in open interest on a very narrow range on higher volume, but very narrow ranges are typical of flags. We've got a bear flag forming. We've got a very narrow range yesterday. 2,200 in an open interest in the 10-year isn't all that substantial. Here's the 30. Okay, here's our regular trading hour trend line for our bear flag. We've breached that. Longer time frame, we've got a breach down here. Weekly kickoff low is again down below that at 121.02. We've got a pretty substantial gap here. Settlement in the 10 years 122.28. 122.28. Doesn't look like we're going to have much of a chance to close the gap. I'm still looking for opportunities to sell strength in this market. But we've got a long way to go before I'm going to probably start to really lean into shorts, because we've already missed this breakout. Let's check out the 10-year, the nat gas. Where are you? There you are. So we're still holding decent upside structure. That remains. We've put ourselves in a little bit of a balance box here. Yesterday, we looked above it towards weekly kickoff high. We were unable to maintain above the high for the week here. We're still largely, to some degree, inside last week's range, just kind of teetering on it here. Yesterday, on higher volume, okay, don't forget this is really just ending rollover. On higher volume, we added 12,000 in open interest. So when we think about the auction process, if the auction is attempting to move higher and it's bringing in volume, in other words, volume is increasing and open interest is increasing, it's doing a good job in continuing in that direction, which I believe this market is. Okay, we've had some time to balance here, and that's giving us the opportunity to even inventory. I'd be looking for opportunities to buy weakness, I think, at the lower levels than we are right now. Here's the 30. Got some overnight inventory to the short side. No gap. I'm going to try and stay patient here. Overnight low does look interesting. For a potential long. It's value low from a couple of days ago. It's a pretty good congestion area, which may end up providing a supply area, a demand area. So just a couple of thoughts on that. Oh boy. So it was a short week for me this week. I just engaged on Monday night into Tuesday. Okay. All right. I got a couple of good questions here, and I want to certainly address those. And Fred, I'm with you. I got to be careful how I react to fundamentals. I'm much more visual as far as the charts are concerned than trying to decipher what the fundamentals are telling us in these markets. Liam, any thoughts on the 2 and 10 inverting? Lots of eyeballs on that right now. That is a sign of potential recession. Are we seeing it in the markets? I would say over the past couple of weeks, probably not. But it's something that all eyes are on. The yield curve this year looks drastically different from last year. Give it 2 weeks on the euro. James, have a good day. It's a challenging environment when it comes to that, isn't it, Fred? Yeah, I'm the same. I got to keep trying to trade what I see and just receive a bit of confidence from the fundamentals. Very good. Might want to add a few extra wrenches to that TA toolbox. Never hurts. Where are you seeing open interest on your chart? Okay. I'm going to go back to the charts for a minute here, and I'll show you. Okay. So if you are using TS Trader or any other platform, they're going to have a quote board. Okay. You can add open interest to your quote board. On TS Trader, it's view settings, select columns. So these are the visible ones. These are the ones that are not visible but available. So if you find open interest, you can just drag it over and save it to your quote board. In the equities, when it's not during rollover, I think it's fine to just be looking at the front month. However, when we look at something like crude oil, let me pull this up. Okay, this is the daily bulletin from the CME group. I'm going to put the link in the chat here for you. When you pull this up, you're going to see all the different products that are available on CME group opportunities here. We're going to hit energies. Thursday, March 31st. This is the information from yesterday. This is the preliminary bulletin. The final is not going to be up yet. I'm going to refresh it just to double check, but no, we're on the preliminary. The final numbers will be up probably around 9 o'clock. So I'm going to magnify this. So we have May, we have open interest. Okay, the May open interest is 273,271. This is an estimate at this time. But when we look at how deep crude oil is, there's lots of spreading, lots of open interest way out into the future. Okay, we're looking at December of 24 here, and we already have 28,000 in open interest in December of 24. This market goes all the way out to basically for 10 years, and this is the total open interest. So when I'm thinking about looking at the open interest in crude oil, with all of these months trading this much open interest, I focus on the total open interest for my gauge of how open interest might be used in a tool to find direction, longer time frame participation. Okay, now if we're going to look at equities, as long as equities are not in roll, okay, we're looking at the vast majority of open interest being in the front month, looking at about 18,000 open interest in the future months. But I'm always looking at the total number, the total, not just the front month. So you can see it on what the heck is going on here? All right, then. There, you can see it here, but that's just the front month. Okay. Now, if you will join me for group coaching on Monday or Wednesday, we can get a little bit deeper on how I collect that information and how I use it to look at the market in a longer time frame, longer time context, and how I can use that to give myself a more accurate hypothesis as to what I'm going to do in the day time frame. All right? Jill, hopefully that's going to help you. Let's take our deep breath. Stay humble, grateful, and creative today. Happy Friday, everyone. Please keep praying for peace. Be good to yourself. Be good to each other. Stay kind. Stay clean. Stay healthy. Have a great trading day today. Have a great weekend. And I will look forward to seeing you all back here on Monday morning, 7:45. Get out there and profit. I'll see you in the proverbial trading pit here in a couple of minutes. Have a great day and a great weekend.